Right now, there's roughly $400,000 in your bank account. Except you don't have $400,000. You have $40,000. But the bank lent out $360,000 in your name that didn't exist before they lent it. And this is not a conspiracy theory. It is how the Bank of England officially describes the banking system, in their own words, in their own paper, published in 2014. I'm Ape, and this is exactly how money actually works. Let's start with what most people believe. You deposit money. The bank keeps it safe. Someone else borrows it. The bank is the middleman, moving existing money from people who have it to people who need it. Clean, simple, logical, completely wrong. The Bank of England said this explicitly in their 2014 quarterly bulletin. Quote, "Rather than banks receiving deposits when households save and then lending them out, bank lending creates deposits. Lending creates deposits, not the other way around." Read that again if you need to. The money you think is sitting in your bank account was created the moment someone else took out a loan. Let's make this concrete. You walk into a bank. You want a mortgage, $400,000. Here is what most people think happens. The bank checks its vaults, finds $400,000 from other customers' savings, and hands it to you. Logical. Not what happens. Here is what actually happens. The bank opens a spreadsheet. On one side, it writes loan owed by you, $400,000. On the other side, it writes balance in your account, $400,000. The money did not exist before that entry. The bank did not transfer it from anyone else's account. It created it by typing a number into a computer. That is not a metaphor. That is the mechanism. The Bank of England calls this the moment bank lending creates deposits. Stay with me here, because what comes next is the part that changes how you see every number in your bank account permanently. If you don't believe Ape, which is reasonable, believe the Bank of England. In 2010, UK banks held £1.40 in reserves at the central bank for every £100 of new money they had created. £1.40 for every 100. That is not a savings account. That is a confidence system. In the UK right now, gross bank deposits exceed the physical currency issued by the Bank of England by a ratio of more than 30 to 1. For every £30 circulating in the economy, 1 is physical currency from the central bank. 29 were created by commercial banks through lending. Not printed, not minted, typed. Here is the part most people ask next. If banks create money when they land, what happens when the loan is repaid? The money is destroyed, literally. When you pay back your mortgage month by month, the bank deletes the corresponding entry from its spreadsheet. The money that was created when the loan was made ceases to exist when the loan is repaid. Money is not permanent. It expands when banks lend more. It contracts when loans are repaid. The total amount of money in the economy is largely determined by how much banks are currently lending, not by how much gold is in a vault somewhere, not by a government printing press, by how many people currently owe money to a bank. So why does this matter? 3 reasons. First, when banks lend aggressively, more money enters the economy. Prices rise. Your savings buy less. When banks pull back lending, money contracts. Asset prices fall. Recessions happen. You didn't vote on this. Nobody asked. Second, banks earn interest on money they created. You deposit £100. The bank creates 900 more against it, lends all of it out, earns interest on all of it. They did not earn that interest by being careful stewards of your savings. They earned it on money that didn't exist until they needed it. Third, the 2008 financial crisis was not caused by people borrowing too much real money. It was caused by banks creating too much new money against assets that turned out to be worth less than the loans written against them. When the assets fell, the loans remained, and the system built on 30 to 1 confidence ratios nearly collapsed. You didn't vote on this. Nobody asked. 2 questions Ape always gets here. Is this illegal? No. It is the official, documented mechanism of modern banking, described by the Bank of England, the Federal Reserve, the Deutsche Bundesbank, all official sources. Is this wrong? Ape has no opinion. There are serious economists who argue this system enables economic growth that a pure gold standard could never support. There are serious economists who argue this system is inherently unstable, prone to cycles of inflation and crisis because money creation has no physical anchor. Both arguments have real evidence behind them. Ape is not here to tell you which is right. Ape is here to make sure you know the mechanism exists before you decide what you think about it. Here is everything in 60 seconds. Most people believe banks lend out their customers' savings. The Bank of England confirmed this is not how it works. When a bank makes a loan, it creates new money by adding entries to a digital spreadsheet. The loan creates the deposit, not the other way around. In the UK, bank-created deposits exceed physical central bank currency by more than 30 to 1. When loans are repaid, that money is destroyed. The total money supply expands and contracts with bank lending, not with government printing. Banks earn interest on money they created, not on money they were entrusted with. This is not a conspiracy. It is the official documented mechanism of modern banking, described by the central banks themselves. Most people were never told. Is it illegal? No. Is it wrong? Ape has no opinion. Both sides have real evidence. Here is what Ape wants you to take from this. The money in your account is not sitting in a vault. It is a number on a spreadsheet backed by the confidence that when you ask for it, someone will provide it. That confidence has held for decades in most countries. It failed in 2008. It has wobbled before that. It will be tested again. Understanding the mechanism does not tell you to distrust banks. It tells you to understand what you are trusting. Money is not a fixed physical thing. It is a system of coordinated belief maintained by institutions whose incentives are not always aligned with yours. Knowing that is not paranoia. It is financial literacy. What you do without understanding is yours. Drop a comment below. Tell Ape, did you know? Banks create money when they lend. Most people don't. And most people were never taught in school because this is not in most economics textbooks. Hit subscribe. Ape will keep explaining the financial systems that run the world that nobody broke down properly. See you next time.